I stood at table 14, 3 rows from the stage, holding a glass of iced tea I hadn't sipped in 20 minutes. The banner behind the podium read, Granger Hollis Building Services, 15 years of excellence, and the ballroom at the Marriott in Overland Park was packed. 312 employees, give or take. I know because I helped plan the seating chart. I was the director of financial operations. I'd been with the company for 6 years. And in about 90 seconds, the man adjusting the microphone on that stage, my boss, CEO Dale Beckworth, was going to fire me in front of every single one of them. He hadn't told me, not directly, but I'd felt it building for 3 weeks, ever since I refused to sign off on a vendor reconciliation that didn't add up. What I didn't know, what I was about to learn in the worst possible way, was that Dale wasn't just punishing me for asking questions. He was trying to destroy my credibility before a specific presentation reached that screen behind him. A presentation the auditor sitting 2 tables away from me had already loaded onto the laptop. Dale tapped the mic twice, smiled at the room, and said my name. Before we get to the awards portion of tonight's program, I need to address something that affects every person in this room, something I wish I didn't have to say publicly. He paused, practiced. As many of you know, our annual audit process has identified some concerns in our vendor payment records. After a thorough internal review, I've determined that these issues originate from our financial operations department, specifically from decisions made by our director, Megan Sadler. I set the glass down. My hand was shaking, and I didn't want anyone to see it. Effective tonight, Megan's employment with Granger Hollis is terminated. I want to be transparent with all of you. This company runs on trust, and when that trust is broken, even by someone in a senior role, we have to act. 300 people turned to look at me. Some craned their necks. Some already had their phones in their hands. I remember Pam Woodruff from HR sitting at the head table with her napkin pressed against her mouth. I remember our IT manager, Carl, pushing his chair back like the floor might open up. And I remember the auditor, Rachel Yoon from Whitfield and Associates, looking not at me, but at Dale with an expression I couldn't read. Dale was still talking, something about accountability and protecting the team. I stood up because sitting felt worse. My badge lanyard caught on the chair, and I had to unhook it, which made me fumble, which made people look away. That small moment of clumsiness, that's what broke something in me. Not the accusation, the fumbling. I walked toward the exit along the side wall. No one stopped me. No one said anything. I made it to the hallway before my operations coordinator, Travis Lund, caught up. "Megan, what the hell just happened?" "I don't know yet," I said. And that was mostly true. Let me go back. Not to the beginning of everything, but to the part that matters. I joined Granger Hollis when I was 31. The company manages commercial building maintenance for office parks, medical complexes, retail centers, about 240 properties across Kansas and Missouri. Dale Beckworth had co-founded it with his college roommate, who'd sold his stake and moved to Arizona years before I arrived. By the time I came on, Dale was the sole operating executive, answering to a 5-person board that met quarterly and mostly deferred to him. He hired me out of a regional property management firm where I'd been doing accounts payable for 4 years. The jump to director of financial operations was significant. Dale made it happen. He told me during my second interview that he wanted someone who would challenge the old processes, not just maintain them. He seemed like the kind of leader who meant that. For the first 3 years, he did. He backed me when I restructured our vendor approval workflow. He defended my department's budget when other directors wanted cuts. When my mother got sick in 2021 and I needed to work remotely for 6 weeks, he approved it without hesitation and sent flowers to her hospital room. I respected him. More than that, I felt I owed him something. That sense of debt is the thing I've spent the most time thinking about since. The first irregularity appeared on a Tuesday in March, about 8 months before the anniversary event. I was reviewing quarterly vendor payments and noticed a company called Ridgeline Consulting Group. They'd received 4 payments over the previous 2 quarters, totaling just under $68,000. The payments were coded to building maintenance consulting, a category broad enough to cover almost anything. Each invoice had been pre-approved at the executive level, which meant they'd bypassed my department's normal 3-signature review. I pulled the vendor file. Ridgeline had a mailing address in Lee's Summit, Missouri, a generic website with no employee names, and a W-9 on file. The tax ID checked out with the IRS database, so the company existed. But I couldn't find a single building manager who'd worked with them. No project notes, no deliverable descriptions, no site reports. I should have documented my concern in writing that same day. I didn't. Instead, I walked down the hall and asked Dale about it in person. He was eating a sandwich at his desk. He barely looked up. Ridgeline? That's Jerry Pratt's outfit. He does facility assessment consulting for us on some of the newer properties. I brought him on last year. I don't see any deliverables in the file. Because Jerry reports directly to me. It's strategic level work, Megan. Not everything flows through your approval queue. He smiled. That's a good thing. Means you're not buried in paperwork. I accepted that. I walked away. That was my mistake, the real one, the one that mattered. I trusted the explanation because it came from the man who'd given me my career, and because questioning it further felt ungrateful. I told myself I'd circle back if another payment came through without documentation. 2 more payments came through. I didn't circle back. By June, Ridgeline Consulting had received a total of $109,000. I finally mentioned it to Travis during a routine reconciliation review. He shrugged and said Dale approved a lot of vendors personally, but something about the way he said it quickly, looking at his keyboard, told me he'd noticed it too and decided not to push. In July, I pushed. Not with Dale, with the audit. Whitfield and Associates had been our external auditor for 3 years. Rachel Yoon was the senior manager assigned to our engagement. During her interim fieldwork, I flagged the Ridgeline payments as items she might want to examine. I framed it carefully procedural concern, approval controls, nothing accusatory. Rachel thanked me and noted it. That should have been the end of my involvement. Instead, 3 days later, Dale called me into his office and closed the door. He wasn't eating a sandwich this time. Rachel Yoon asked me about Ridgeline Consulting, he said. She said the inquiry originated from your department. It did. The payments bypassed our normal review process, and I thought, you thought you'd go around me to the auditor. His voice was calm, but his jaw was tight. Megan, I've told you what Ridgeline does. I've explained the relationship. And instead of trusting my answer, you escalated it externally. Flagging items for the auditor is part of my job, Dale. Your job is to support the financial integrity of this company, not to create problems where none exist. He leaned back. I've always supported you. When other people on the leadership team questioned whether you were ready for your role, I was the one who said yes. Don't make me regret that. It wasn't a threat exactly. It was worse. It was a reminder of the debt. And it worked partially. I didn't withdraw my flag to Rachel, but I stopped actively pursuing Ridgeline on my own. I told myself the auditor would handle it. What I didn't know was that Dale had already started handling me. Over the next several weeks, small things changed. My access to the executive payment approval log was revoked during a system update that never seemed to end. Dale began copying our CFO, a semi-retired board member named Howard Fenn, who worked remotely on emails that reframed my procedural concerns as personality conflicts. He told the HR director, Pam Woodruff, that I'd been resistant to leadership direction. He praised me in a staff meeting for attention to detail in a tone that made it sound like a diagnosis. I noticed these things. I told myself they were manageable. In September, I made my second mistake. I met Dale for coffee at a cafe near the office because he suggested it. Neutral territory, he said. He wanted to clear the air. Over a latte, he told me he understood my concerns about Ridgeline, that he'd asked Jerry Pratt to provide better documentation going forward, and that he valued my diligence. Then he said something I've replayed 100 times. The anniversary event is in November. The board wants a clean audit presentation. Let's make sure we get there together. I thought he was extending an olive branch. He was measuring whether I'd stay quiet long enough for the event. I told him I appreciated the conversation. I didn't follow up in writing. I didn't email myself a summary. I walked back to the office, believing we'd reached an understanding. By October, Ridgeline Consulting had received 6 additional payments. The total was now $237,000 over 14 months. Rachel Yoon's team had been digging. She didn't tell me what they'd found. Auditors don't typically share findings with management employees before presenting to the board. But she did ask me one question during a phone call about unrelated bank reconciliation items. Megan, does Dale Beckworth have any ownership interest in a consulting firm or any side business entity that you're aware of? Not that I know of, I said. Why? Just confirming. She paused. I may need a copy of the original Ridgeline vendor application, the one with the initial authorization signature. Can you pull that for me? I said I would. But when I went to the vendor files the next morning, the Ridgeline folder had been moved to Dale's office. His assistant, Linda, told me Dale had requested several vendor files for board preparation. I emailed Rachel to let her know I couldn't locate the physical file. She responded with one line, "Understood. We have what we need." 2 weeks before the anniversary event, Dale restructured the event agenda. The auditor's presentation, originally a 30-minute slot covering annual financial controls and operational findings, was moved to the end of the evening, after the awards and his keynote address. He told the planning committee it was a pacing decision. He told Pam it was because employees would be bored by audit slides before dinner. He told me nothing. By then, we weren't speaking outside of group meetings. The week before the event, he removed me from the audit committee distribution list. When I asked Pam about it, she said Dale felt it was a conflict of interest given the open questions about vendor documentation in my department. I asked what open questions. She looked uncomfortable and said she'd been told I would understand. That's when I called my sister Danielle in Wichita. She's a paralegal, not a lawyer, but someone who understands documentation. I told her everything: the payments, the revoked access, the private meetings, the growing isolation. You need to write it down, she said. Tonight. Everything you remember. Dates, amounts, conversations. Send yourself a copy from your personal email. That feels like I'm building a case against him. You're protecting yourself, Megan. There's a difference. She was right, but I only half listened. I wrote a timeline, saved it to my personal laptop, but I didn't send it to anyone. I still believed the audit would handle the substance, and the rest was just office politics I could survive. On the night of the event, I put on a navy dress, clipped my employee badge to my lanyard, and drove to the Marriott. I sat at my assigned table with Travis, 2 building managers, and a procurement analyst named Keiko who kept refreshing her phone. The ballroom was full. Every regional office had sent people. Dale was at the head table with Pam, Howard Fenn, two other board members, and Rachel Yoon. I remember thinking it was strange that Rachel was seated with the board. Usually the auditors sat with finance staff. Dale took the stage at 7:15. He talked about the company's 15-year journey, the growth, the values. He was good at it. People clapped. He gave out 3 employee recognition awards. He made a joke about the Kansas City barbecue at last year's event. People laughed. He was charming and warm, and if you'd never seen the other side of him, you would have trusted him completely. Then he fired me. After the announcement, after I stumbled out of the ballroom with Travis behind me, I stood in the hallway next to a luggage cart and a sign for a wedding reception in Ballroom C. My phone had 17 text messages. I didn't read them. Travis said, "He can't just do that. He's the CEO. The board was right there. None of them stopped him." That doesn't mean it's valid. Megan, you didn't do anything wrong. He said the vendor issues came from my department. That's technically true. The payments were coded to building maintenance consulting, and my department processes those codes. But you didn't approve them. I knew that. But I also knew how it looked. My name was on the department. The payments went through my cost center. And because I'd waited months to escalate, there was no clean written record of my early concerns. Dale had built a frame, and my silence had helped him build it. Pam Woodruff came through the ballroom doors 10 minutes later holding a manila envelope. "Megan, I'm so sorry. He told me this afternoon. I tried to tell him this wasn't the right way. But you didn't stop it." She pressed her lips together. "I prepared the separation paperwork. He wants you to sign it tonight. It includes a general release and a confidentiality provision." I looked at the envelope. I looked at my badge, still hanging from the lanyard around my neck, and I heard my sister's voice. "Protecting yourself is different." "I'm not signing anything tonight," I said, "and I want it noted that I'm not agreeing to the stated reason for termination." Pam nodded slowly. "I'll document that. One more thing. The audit presentation is still on the agenda." Pam glanced back at the ballroom doors. "As far as I know." "Then I'm staying in the building." I didn't go back into the ballroom. I sat in a chair near the lobby bar, where I could see the doors. Travis sat with me. Keiko texted me, "Is this real? Are you okay?" I didn't respond. Inside the ballroom, Dale was finishing his keynote. I learned later that he'd added a section improvised, not on the original slides, about financial accountability and the importance of reporting irregularities. He was building context, planting the idea that any audit findings about vendor payments pointed to me. At 8:40, he introduced Rachel Yoon. "As part of our commitment to transparency, we've invited our auditing partners from Whitfield and Associates to share a brief overview of this year's operational review. Rachel, thank you for joining us." He expected a brief overview. He expected the version of the presentation he'd reviewed 2 weeks earlier, a general summary of internal controls with no specific vendor findings. What he didn't know was that Rachel had updated her slides after receiving a bank confirmation letter the previous Friday. The confirmation had come from a routine verification request sent to every bank where the company held accounts. But one confirmation came back for an account the company didn't have on its books. An account at a regional bank in Olathe. An account whose authorized signatory was Dale Beckworth. Rachel stood at the podium and thanked the company for their cooperation. She clicked to her first slide, a standard chart showing the audit scope and timeline. The second slide covered payroll controls. The third covered fixed assets, normal, expected material. The fourth slide was titled Vendor Payment Analysis Selected Findings. I wasn't in the room. Travis was relaying updates by text from a colleague still at his table. Travis. She's showing a vendor payment chart. Ridgeline is on it. My chest tightened. Travis. She's showing 14 payments to Ridgeline over the past 18 months. Total $237,000. She's asking if anyone on the board authorized these. Travis. Dale just said it's an approved consulting arrangement. Rachel's asking for the contract. He said it's in his files. Then nothing for 2 minutes. I stood up and walked to the ballroom doors. I opened one, just enough to see the screen. Rachel had moved to a new slide. It showed a table, 4 columns: payment date, amount, vendor name, destination account. The account numbers were redacted, showing only the last 4 digits. But next to the Ridgeline payments, in a column labeled Intermediary Account Bank Confirmation, there was a line highlighted in yellow. It read, Account ending 4481, Olathe Savings, Authorized Signatory, D. M. Beckworth. The room was silent, not dramatic silence, the confused, uncomfortable silence of 300 people who didn't fully understand what they were looking at, but knew it was wrong. Dale stepped toward the podium. Rachel, I think there's been a misunderstanding. That account is a company reserve fund that I manage directly. It's been disclosed to Howard. Howard Fenn, the semi-retired CFO and board member, leaned into his table microphone. Dale, I've never seen that account. We discussed it 2 years ago during the Lenexa property acquisition. I agreed we needed a maintenance reserve. That was set up through Commerce Bank and is on our books. I don't know what this Olathe account is. Rachel clicked to the next slide. This one showed a reconciliation comparison the company's general ledger entries versus the bank confirmation responses. The Olathe account was marked in red as unrecorded, no corresponding ledger entry. Below it was a summary of deposits into the account that matched, almost to the dollar, the payments made to Ridgeline Consulting. For the board's awareness, Rachel said, keeping her voice neutral and professional, the deposits into this account correspond in timing and amount to the payments issued to Ridgeline Consulting Group. The entity's registered agent shares a mailing address with a property owned by Mr. Beckworth in Lee's Summit. We're not in a position to make a final determination tonight, but these findings represent a material control deficiency that requires immediate board attention. Dale gripped the edge of the podium. His face hadn't changed expression. That was the most unsettling part. He was still performing. This is exactly the kind of reckless conclusion I was concerned about, he said, turning to the audience. This is why I took action tonight regarding our financial operations department. Someone in that department provided misleading information to the auditors, and now we're seeing the result. Lydia Marsh, the board's vice chair, spoke from her seat. Dale, sit down. He didn't sit, but he stopped talking. Lydia looked at Rachel. Is there additional documentation supporting these findings? Yes. The complete work papers, bank confirmations, and vendor registration records have been provided to the audit committee as of 4 o'clock this afternoon. Lydia turned to Howard. Did you receive those? Howard nodded. I received the packet at 4. I reviewed it before the event. I was waiting for the presentation to determine next steps. Dale's mouth opened, closed. He looked at Howard the way you look at someone who was supposed to be on your side. Howard didn't look back. Lydia stood. We're going to end the formal program here. Dale, I'm asking you to step away from the podium. The board will convene an emergency session tomorrow morning. Until that session concludes, your financial signing authority is suspended. The room didn't erupt. There was no gasping or cheering. There was the sound of chairs shifting, of 300 people trying to figure out what had just happened and what it meant for their jobs. I saw a building manager from the Topeka office remove his Granger Hollis lanyard and set it on the table. I saw Keiko crying. I saw Dale's assistant, Linda, staring at the screen with her hand flat on the tablecloth, like she was steadying herself. Dale walked off the stage, not toward the exit, toward me. I was still standing at the cracked ballroom door. He pushed through it and stopped less than 3 feet away. His face was flushed. "You did this," he said quietly, "after everything I did for you." I had imagined this moment. In every version I'd imagined, I had something devastating to say, something sharp and final. But standing there looking at a man I'd respected for 6 years, a man who had once driven 40 minutes to bring my mother flowers, I didn't feel triumphant. I felt tired and sad and angry in a way that had no clean edges. "I flagged a vendor discrepancy," I said. "That's all I did. You're the one who built the rest." He shook his head, looked past me down the hallway, and walked toward the parking garage. The next 6 weeks were hard in ways I hadn't expected. The board placed Dale on administrative leave the following morning. They retained a forensic accounting firm to trace the full extent of the Ridgeline payments. The investigation eventually confirmed that Ridgeline Consulting was a shell entity. Jerry Pratt, the name Dale had given me, was Dale's brother-in-law's former business partner. He'd signed the W-9 and cashed checks for a fee, routing the balance to the Olathe account Dale controlled. The total over 18 months was $237,000. Not millions, but enough to matter to a company that had struggled to fund its equipment budget for 2 years. My termination was rescinded 11 days after the event. Pam called me personally. She was careful and formal and apologetic in a way that felt rehearsed, but I could hear genuine discomfort underneath it. The board offered me reinstatement with back pay and a written correction to my personnel file. I didn't accept the reinstatement. That surprised people, Travis especially. He called me 3 times trying to understand. "You were right, Megan. You won. Why wouldn't you go back?" Because going back meant working inside a system that had watched me get humiliated on a stage and done nothing until a spreadsheet forced them to act. Howard Fenn had received the audit packet at 4 o'clock that afternoon. The firing happened at 7:15. He'd sat through it. Lydia Marsh had sat through it. They let it happen because they didn't yet know whether the evidence would be strong enough to override Dale's version. I understood their reasoning. I didn't forgive it. I negotiated a fair separation agreement, back pay, corrected employment record, a neutral reference, and a reasonable severance. No confidentiality restriction on the facts of what happened. That last part mattered to me more than the money. Danielle drove up from Wichita the weekend after the board vote. We sat on my back porch, and she asked me how I felt. I told her I felt like I'd survived something I should have fought earlier. She didn't argue with me or reassure me. She just said, "You fought it when you could. That counts." Dale resigned in January before the board could formally remove him. His attorney sent a letter characterizing the departure as mutual and citing philosophical differences about company direction. The forensic accountants referred their findings to the county prosecutor's office. As of the last I heard, the investigation was ongoing. No charges had been filed. The money had not been fully recovered. Jerry Pratt had retained a lawyer and stopped cooperating. In February, Dale sent me a message through a mutual acquaintance, a former vendor rep named Doug, who still played in Dale's golf league. Doug called me, awkward and halting, and said Dale wanted me to know he was sorry for how the event was handled. Not for the payments, not for the framing, for how the event was handled. He also wanted to know if I'd be willing to provide a statement supporting the idea that the Olathe account had been a good faith reserve fund that was poorly documented. I told Doug I wished him well, and that I wouldn't be providing any statements. Not every relationship recovered. Carl from IT never spoke to me again. I don't know if he believed Dale's version or just didn't want to be associated with any of it. A few building managers who'd been close to Dale treated me with a coldness that lingered at industry events. One of them told a colleague I'd orchestrated the whole thing to get a payout. That stung more than it should have, considering I'd turned down reinstatement and taken a standard severance. Travis stayed. He moved into an interim operations role under the new leadership team. We still talk, though less than before. There's a distance now that neither of us created on purpose. He saw me at my lowest and my angriest, and I think being around me reminds him of a version of the company he'd rather forget. Keiko sent me a card. Handwritten, 2 lines. "You deserved better than what happened that night. I'm sorry I just sat there." I keep it in my desk drawer at my new job, a controller position at a medical equipment distributor in Lawrence. Smaller company, less money, good people. I negotiated my title and my access level before I accepted the offer. I asked for written approval authority on all vendor payments above $5,000. The owner looked surprised. I told him it was non-negotiable. I still have my Granger Hollis badge. It's in a box in my closet, under a stack of old tax folders. I didn't keep it as a trophy or a reminder to stay angry. I kept it because for 6 years it meant something real to me. Competence, belonging, a career I'd built from a 4-person AP department to a director's office. The night Dale fired me, the lanyard caught on my chair and I fumbled with it in front of 300 people. And that small humiliation cut deeper than any accusation he made from that stage. Now when I look at it, I don't feel the fumble. I feel the moment I stood in that hallway, holding an unsigned envelope, and chose to stay in the building.